Welcome to our first episode of Real Estate Live. I'm Kathy Mae Martin, and I'll be your host today. This is the show where you're going to get real answers in real time for all your real estate questions. Check the screen below, and our email address and phone number is on there. You can email us or call us, and we're going to answer your questions live on the air. Our hot topic today is going to be interest rates, so stay tuned. We're Real Estate Live. Okay, we're back. I'm excited to have my co-host today, Miss Glenda Johnson. She's been a powerhouse in this real estate world for over 30 years, and she's probably forgot more than most people know about real estate. And I got to tell the story. Glenda, a couple of years ago, sold 102 houses in 1 year, all by herself. Now, this wasn't a team. This is Glenda working 9 days a week in this real estate business. She's amazing. She does so much for the community. We're excited you're here. Thanks, Glenda.
Kathy, thank you so much for that introduction. You have always been my coach and my pusher to make sure we get everything done the way it needs to be done. But that's what real estate is about. And we're always here to help people with all your real estate needs, whether it's buying, selling, leasing, or just questions, estate sales, rental. That's what Coldwell Banker's about, is helping our community and helping the people. And we'll always be here to do that for you. Today we have a lot going on, like there's a new listing coming up that we have on Joyner Holler in Rockwood. That's 16 acres. And today's feature is 117 Mallard Duck Lane in Rockwood. Now, the picture shows the 3-story house. The people have been there probably 10 years and they're ready to move on. The house has is dockable. I'm sorry, it is dockable, and they are ready to add the top to their dock, which is proof of their 26A permit that they can do so. That little ride right out there will take you to the main channel of beautiful Watts Bar Lake. Now, this is the kitchen living room combination front room as you walk in. The split screen shows their front door and their kitchen area. The living room is very comfortable. And just to the middle of the screen, you can see a Murphy bed that, if you have enough company, you can pull down that Murphy bed and make more bedrooms. The house is decorated beautifully. She should have been a professional decorator. The deck wraps around to 3 sides. The kitchen is a gourmet kitchen with the island. So many extras here for this beautiful home. This is the bathroom downstairs. Each floor of this house has a full bathroom. That's the laundry room downstairs. And they have used the house as an Airbnb for quite some time. I do have the records of what they made on that if that's necessary. This is the downstairs area, which does have a patio just right off the outside of the house that leads down to the water as well. The kitchen is really cute. If y'all know me, you know I love mechanical stuff, and they have done the cutest idea with the kitchen to use an old toolbox for an island. Again, a view of the house. Now, this is the upstairs master suite. It is stunning. It has plenty of room. The bathroom is beautiful with a full walk-in shower. If you like them good enough, more than one in the shower. Again, the walk-in closet is just super big. It would hold most of Kathy's clothes. We do have a little coffee area upstairs, and again, the deck off of the top floor has a beautiful view. The backyard is terraced, so it's easy to get up and down, and that gives you a shot of the 3 decks, the patio, the deck, and then the upstairs little balcony. Again, leading right out to the main channel. So please give me a call if I can help you all schedule a showing for my listings or anyone's. I'm here to help you in all your real estate needs. Thank you for listening today.
Thank you. Stay tuned. We're Real Estate Live. We have Glenda's name and number on the screen. If you have any questions regarding that listing, Glenda's here. Like I said, she's 9 days a week to answer all your real estate questions and calls. She is a true veteran in this business, and we appreciate her taking time out today with her busy schedule being here to share one of her listings with us. Okay, we're going to get right into the main topic of our program today. I'm super excited to have Chris Stubblefield with Gateway Mortgage. He's a seasoned veteran in the lending business. He's been in the business for over 20 years. I've worked with him personally. He's a great communicator, and he always gets us to the closing table. Chris, interest rates is a big factor. It's one of the biggest factors for us on this side of the table in the market today. Do you agree with that?
Yeah, thanks for having me, Kathy. It's a gorgeous Friday afternoon in East Tennessee. Couldn't be more proud to be a part of the show. I would say it's a main topic of discussion in today's environment. Certainly every day we get calls with inquiries, where are your interest rates? So there's just a lot of variables, a lot of influencers that I would call that can drive the end rate for the consumer. So quickly, I would just like to address what's called mortgage-backed securities, and those are financial products that are pooled and sold to investors in the secondary market, and that often will be tied to the bond market. And so for the beginning, the first-time home buyers or more experienced home buyers, as they're at home or on their lunch break, and they can look at a Yahoo Finance or a CNBC financial news outlet or similar. I think if they watch the 10-year Treasury, that's going to be a good indicator for a reasonable forecast for where these interest rates may go, because it's extremely volatile for a lot of reasons, government shutdowns or other. Things are just volatile or uncertain. And so I think for anyone that's really paying attention to the rates, follow that 10-year Treasury, and as sure as that red graph is moving up, typically the pricing moves up with it, and as it tends to move back down, I think the rates tend to follow that trend. But depending on the loan programs and credit scores and some other variables, they do have the ability to influence the end rate for the consumer. It's a hot topic.
It is a hot topic, Chris. I know a lot of times when I'm watching the evening news and they start talking about those interest rates going down, I know I'm going to be busy the next day because people are calling in and they automatically think that the interest rates went down. Hey, I better call in.
Yeah.
That's not necessarily the case, is it?
That's true. So as we hear the Feds announcing their lowering these rates, that affects the prime rate. Your home equity lines of credit, your credit cards, things of that nature may take more of an immediate effect. The actual bank rate is typically going to be a slower drip. It doesn't happen overnight. It takes a little time to catch up. Yeah, it's interesting how it works.
It is an interesting how it works, and we've been waiting all year for those interest rates to start dropping, and they finally started dropping, and the market's starting to pick up. So we're excited, and interest rates are always a hot topic.
They are. So I've actually got a small list of some influencers here, things that I would consider influencers. The rates are going to vary. It's just the nature of where we're at for many reasons. Like I said, whether it's the marketplace volatility, government shutdowns, other reasons, it's just something we have to deal with on a daily basis. So some of these variables or rate influencers, I'd say maybe start with purchase. Is this a purchase or a refinance? There's not a lot of variable in the difference between the two, but then sometimes it goes to conforming and non-conforming loan, and it's kind of an in-depth conversation, but just hitting some high level notes today. For those who do want to inquire more, please call us or text in through your social media outlet, and we'll try to answer those. But we can get more specific for conforming and non-conforming. Conforming is mostly your conventional or any of these government-backed programs, they're conforming loan limits. And if we exceed those loan limits or other factors, sometimes it could go into what's called non-conforming. Certainly, conforming is going to have better pricing than a non-conforming program. And then, in addition, your home status or your home occupancy. Is it primary residence? Is it a second home or an investment home?
Right.
Obviously, you're going to carry better pricing, better rates for a primary home versus an investment home. So there's factors like that. Loan to values, your loan value minus the down payment that you might have available. So those factors could certainly influence
The rate.
the rate and the pricing as well as others.
So for a first-time buyer, are there some loans out there where they can get in still with 100% financing or 5% down?
Yeah, good question. So there are true first-time home buyer programs. They're labeled as first-time home buyer programs. They've got their own qualifiers. We can get more in depth into some of that, but they typically would allow for a little less down payment and a little bit better pricing on the end interest rate.
Yeah.
They're good programs, but they do have some different qualifiers to get those available. Otherwise, we just default to another conventional or government-backed program. USDA is a great 100% financing.
Right.
VA, a great 100%
Great
option.
program.
So for those first-time buyers out there that are motivated, we've got the tools to help them.
Yeah, you do. That's the one thing about Gateway Mortgage is they do, it's not a cookie cutter for everybody, but they've got
Right.
something for a lot of different options out
Yeah,
there.
the guidelines typically stay the same, but no transactions are the same. Each person's got their
Exactly.
story. They've it's why we do what we do. We enjoy helping people get through hurdles, or maybe there are no hurdles. Maybe it's a quick, easy transaction. But either way, we're here to educate.
Right. So I always tell people when they call that, first thing we got to get pre-qualified. How soon before somebody starts looking would you say that they need to get pre-qualified?
I say if you're in a position to buy, it's always a good time to buy. I'm a believer of that. Interest rates may or may not be exactly where we want them. Hopefully they do continue to improve. But as people engage, they find interest in being a homeowner, it's really as simple as completing application. We typically have those turned around same day, often just within an hour.
Yeah,
So
I know.
we get those turned around really quick, and then of course we would share that pre-qualification letter with the consumer as well as the agent like you,
Yeah.
and turn them loose and start shopping.
Yeah. It's so important to have that pre-qualified letter because I know a lot of homes out there, the sellers, and we can all understand why, they want to make sure that that buyer is pre-approved before they get the house
Sure.
ready, before, they take and, head out on a snowy day.
Yeah.
They want to make sure that these folks are pre-qualified and they're ready to buy.
Yeah, and I'll
Yeah.
tell you, it's interesting. So as we, at Gateway or other banks, as we issue these pre-qualification letters, we're typically not locking that rate until they get a contract. So it's tricky for us as a lender sometimes to manage that process when it is volatile, because those rates sometimes could go up, and we got to be cautious of that to maintain that loan approval. And if they go
Right.
down, certainly we improve as those market conditions allow.
Yes, it's all so important there. If it is a buyer and we get them to call you, Chris, and they're just not quite ready at that point, they need to work on their credit score.
Sure.
How do you guide them through that process?
Keep them motivated.
Yeah,
I think that's the name
thank
of the
you.
game. Keep them motivated. But that's a good point. Not everybody's perfectly qualified. Certainly, a lot of the first-time home buyer community might need a little more help. But anybody that's off the mark, can't qualify just yet on credit scores, we typically are going to try to help them through a credit rescore. It's just a value-add service that we would provide at Gateway. If it's within our ability, we're going to do that at no cost to the consumer. If it's a little bit out of our capabilities, we'll typically refer that out to a local credit repair service. But we do keep open lines with them, and then as they get better qualified, we're able to refer them back to you.
I've
It's a great question.
helped a lot of customers that weren't quite ready, sending them to the right lenders such as yourself and preparing them. And I've had a lot of success with people that have listened to their lenders
Yeah.
and did what they said to do.
Yeah.
So we always appreciate
Well,
that advice.
it's like we're a constant in education mode.
Oh, it
And
is,
if we
yeah.
can add value through educating the consumer, I think it's a win-win, and it's a true team effort at the end of the day.
100%. And that's why I like using you, Chris, because I know you're going to have an open line of communication with myself so that I can keep my sellers informed and the buyers. And that's just so important in this whole transaction is communication.
Sure.
You know, there's that debt to income ratio, and that's important.
It is.
Yeah.
That's another one of the variables that I would say has influence on the end rate. One program is going to offer more or less debt ratio than the other. Conventional loan program typically caps at about 50% versus VA or FHA. Often you can go as high as 55%. So the consumer gains a little more purchase power sometimes through those higher allowable debt ratios. But at the end of the day, you might find better pricing on the interest rate with lower debt ratios. But that debt ratio certainly has some influence in the end rate. And another, I think a good topic of discussion for these variables or these influencers is the subject property type. Is it a single family residence, your typical stick-built home, brick and mortar, or is it a manufactured, single wide, double wide, or other? Condos, land, new construction, they're all just going to have their different debt ratio requirements and their different pricing for their interest rates. So case by case, we'll look at that from one transaction or another.
Right. So that's sometimes the maintenance program is working on their debt ratio to get
True.
pre-qualified.
That's right.
Yeah.
Yeah.
And I know different programs, conventional as opposed to FHA, maybe VA, those debt to ratios can vary.
That's correct.
Yeah.
Yeah. And they do.
Yeah, oh, they do. They do. So I know one thing that once you're under contract and you're pre-approved, I always say, and I know the lender, you're backing me up on this, don't go out and buy a new lawnmower, new car, anything that can mess up your debt ratio.
Yeah.
Don't do that.
Yeah, really, just any additional inquiries on your credit. They may want to go to Lowe's or Home Depot and with anticipation of appliances. We try to say, don't do that. Don't change your everyday spending, but just be aware.
Exactly, because that does happen. Okay, and do we have a question, Scott? Do we have a call in?
On the screen.
On the screen, okay, let me see, I can't, if you can get that, Chris, yeah. Okay, I'm super excited. Christopher Covert has sent in a question. Thank you, Chris. What are the difference between an FHA and a USDA loan, and what are some of the restrictions? That's a great question.
Yeah, thank you for asking, Christopher. The FHA's federal housing, both programs are, as well as most acronym-based programs, FHA, USDA, VA, or others, mostly are government-backed programs. They're great programs. Sometimes allow for, the FHA would allow for a higher debt ratio probably than the USDA, which is a rural development program. FHA would require a minimum of 3.5% down payment at time of purchase, where USDA could allow up to 100% financing at time of purchase. The differentiator between the two, and we'll look at these case by case with you, is the allowable debt ratios that Kathy had just mentioned just a few minutes ago. So FHA would allow a higher debt ratio, upwards of 55%, and then USDA, great program, but it's restricted for more rural areas versus city or other. And they typically are going to limit that debt ratio to probably 44, 45%. So there are some differentiators between the two.
Yeah, great question. We've got a question here. How are your rates on refinance?
Yeah, hey Glenda, thank you for the inquiry.
Well, she's got a customer that's inquiring. so-
Okay, great. There's really no difference between the purchase or the refinance, but it could have influence based on the loan to value for that transaction. It could have some influence is it just a rate and term refinance? You're just simply trying to refinance into a lower rate to get a lower payment, or would they potentially want to do a cash out refinance? Typically, there's an adjustment in the pricing that generates your interest rate for that cash out feature. It's not a huge bump in the pricing, but it's something to be aware of.
Mm-hmm. Yeah, great question, Glenda. I hope that helps your customer there. I get this question all the time. I'll say, well, we need to get you pre-qualified. That's the first step. And they're like, well, we don't want to ding on our credit score when we get qualified.
Yeah.
Tell
Yeah.
us how that works.
Typically, to get a true pre-qualification in play, we're going to want to do what's called a tri-merge credit report, where you're pulling from all three major bureaus. A good question, because this comes up a lot.
A lot.
It's been a hot topic in the industry for a couple of years, where a lot of these credit agencies are selling what they call trigger leads. The bank, certainly at Gateway, and I would think most any bank, we're not in the business to share information, personal information, and we don't. But the credit bureaus have been selling these trigger leads to other banks and people that want to pay for the service or these leads. So we have recently, probably within the last year or so, rolled out the ability to do just a soft pull. So we're just going to pull one bureau. I think that's with Equifax, as a soft pull to just to get a baseline read for a transaction, and we can issue pre-qualifications based off of that. And then ultimately, before going into underwriting, we would want to pull that hard inquiry.
Right.
Yeah, it's a good question. It's been a sore subject in the industry for a little while.
Yes, I get that question a lot, and I get resistance sometimes from buyers that say, "Oh no, I don't. I don't want to lower my credit score by getting pre-qualified."
Yeah, it's a big deal, especially for the ones that are trying to work on those credit scores and work on those debt ratios.
Absolutely.
Yeah, absolutely.
Well, let's talk about honestly, I bought my first house, and this was in the tell my age, in the early 90s, and my first interest rate was 9.75%. And I remember at the closing table, they talked about, wow, that's the best interest rate we've seen in 20 years.
Yeah.
So, we got down to 7, and we started, people were still buying down the interest rates. Our interest rates, for interest rates, it's still a good rate.
Yeah.
They're not the 2% and 3% we saw in the COVID market.
That's right.
Probably not going to see those for a while. So don't miss out on your house waiting on those interest rates to go down to 2 or 3%. But are you doing a lot of buy down rates right now?
Well, we do have features for that. You've got buy down programs. We do have those. We can talk more offline. It's a little bit more in depth than just a high level overview, but you do have features that are called temporary buy downs. And for instance, if today was let's just say 6 1/4 on a 30-year fixed, if you did a 3-2-1 buy down for 3 years, first year it would buy the rate from 6 1/4 down to 4 1/4. I'm sorry, 3 1/4, and then on year 2 it'd go to 4 1/4. Year 5 it would be 5 1/4, and then on year 4 it'd be its fully amortized payment. So we've got those tools. They're valuable tools, but they can sometimes put somebody in a false comfort zone too. So I would want to just educate them on the fluctuations on those payments year over year. Otherwise, at time of purchase, you can do what's called discount points, and it's basically an added closing cost to help facilitate a lower interest rate. So, maybe today's 6 1/4, but you wanted 5 1/2. You can do that, but you got to pay what's called discount points, and ultimately it's additional closing cost.
Exactly.
Yeah, but people take advantage of that. You can get into seller paid closing costs to help the seller, help the buyers, and so you can get really creative with some of those features.
Yes, that's as agents, we do always ask the lender up front, hey, they don't have a lot of money to put down. Can the seller help pay with some closing costs? And quite honestly, that helps us get a lot of deals together and makes it happen. We're getting close on time, but I do want to just touch very briefly on the PMI. That's I get a lot of questions on that.
Yeah, so that's another good one. Thank you for bringing that one up. So PMI is private mortgage insurance. It's forced on any loan, mostly any program, maybe aside from VA, beautiful program VA. But outside of any borrower, any transaction that's not putting 20% down payment, typically the lender will force what's called PMI. It's just an added premium in your mortgage payment, mostly to protect the lender in the event of default. But we hope that never happens, but it is a part of the equation. Without 20% down, if 5% might be more than 10% down on a PMI and on down to 20%. At 20% down payment, that PMI would drop off. Now, if somebody comes in and buys with less than 20% down, which we see a lot of that, once they think they've got 20% equity, they can often do an appraisal to support that equity and then remove that
Drop
PMI.
that. Yeah, that's great. I've had a lot of customers do that. Chris, we do have one more question from Peter. What happens if rates were to drop in between buy-down rates that would benefit the buyer?
It's a good question. I think once you get into the buy-down features and the loan is closed, the rate and terms are just what they are at time of closing. So you would probably find yourself doing a refinance later to lock in that permanent lower rate that you might see. The temporary buy-downs are just that. They're temporary. So they're going to be either for a 3-year or a 2-year or a 1-year, depending on which option you might choose. But once it's closed and funded, those are your terms. So to get out of those terms, you're probably looking at a refinance, just a rate and term refinance. Good question, Paul.
Yeah. Well, hey, this went quick. We're already out of time. Chris, thank you, for being here today. Chris's name and number and his information is going to be posted on screen. If you have any questions regarding lending, real estate rates, interest rates, give Chris a call or an email. I promise he'll do you a great job and he'll take good care of you. So tune in every Friday at noon. We're Real Estate Live, and we look forward to seeing you same time here next week. Thank you for being here.
Thank you, Kathy.
Contact us at soldbykathymaymartin@gmail.com or message us on Facebook. Follow us on Facebook at Coldwell Banker Jim Henry and Associates or YouTube at Real Estate Live CB. Thank you again for being here.
Thank you.